Okay, in this video, we have a bunch of information that's given, and we ultimately, for this one at least, want to prepare a schedule of cost of goods manufactured. So we have all of these beginning and ending balances, beginning, ending in raw materials. We've got beginning and ending in work in process. We've got beginning and ending in finished goods. We've got a lot of different manufacturing overhead numbers that are given. We've got sales revenue, SG&A expenses, and taxes. Okay, tax rate. We got 250,000 raw materials are purchased, 350 on direct labor. Okay, cool. We got all that information. Let's see what we're asked. Okay, prepare a schedule of cost of goods manufactured. So ultimately, in a schedule of cost of goods manufactured, we are taking a look at our work in process and ultimately trying to figure out what is the value of the thing that went from work in process over to finished goods. And that very specific amount, that what we call that, let me get my head out of the way. At least a little bit there. You can see that. Let's just go fully out of the way for a second. We've got cost of goods manufactured as the amount that goes from work in process over into finished goods. Well, what is going to affect that? Well, the way that we can build up to calculating this value is we can start with beginning work in process. We add direct materials, direct labor, and manufacturing overhead to work in process. We can then subtract off ending work in process to ultimately give us our COGS, not COGS, our cost of goods manufactured number. That's ultimately what we are trying to do when we work down here. Let's go through how we calculate all of these other numbers. So we're going to start with, it says, oh, beginning raw materials inventory. Why do we care about that? Well, it's really going to be a way for us to, again, this is just going to feed in. This is going to be a way for us to feed into our direct materials. So it's almost like we have to do a sub calculation or a little bit of a side quest to figure that direct materials number out. And it's going to be beginning raw materials plus purchases of raw materials minus ending raw materials is direct materials that's going over into work in process. So this is how all these different inventory T accounts are related to one another. We kind of come back, but I'll keep it a little bit fuzzy so you can see behind the video. I'm trying to scoop my chair up, but my chair sucks. Okay. So direct materials, beginning raw materials inventory. That's going to be this beginning amount right here, 50. This plus purchases. We purchased 250,000 of raw materials. And then we'd have some subtotal raw materials available to use, 300. We're going to subtract off ending raw materials, which ending raw materials is 70. So that we get raw materials used of 230. So that's the direct materials that goes over into there. So that raw materials used. Okay, the next line item is just direct materials, which in this question it tells us that 350 on direct labor. So direct labor would be the 350. Then we get to manufacturing overhead. These numbers again are just given 10, 30, 120, 25, and 40. So 10, 30, 120, 25, and 40. Okay, total manufacturing overhead, that's 40, 160, 185, 225. So we just total those up. And that tells us total manufacturing costs should be direct materials, direct labor, and total manufacturing overhead. So 230, that's 455, 755 plus 50, 805. Okay, we'd have 805 as our total manufacturing costs. We add our beginning work in process. So that's what we just calculated was all three of these, right? So now we're going to add our beginning work in process. Our beginning work in process was 140. Okay. We add beginning work in process. That subtotal is total manufacturing cost to account for. That's going to be 945. And then we subtract off our ending work in process, right? So we just added beginning work in process plus all of these, right? Total manufacturing cost to account for, subtract off our ending work in process, which was 130, to get cost of goods manufactured, which is ultimately what we were trying to do. So we do that, and we got 815 as our cost of goods manufactured. That's going to go over into finished goods. So again, a lot of information there given, but pretty great problem that kind of shows you how these T accounts are linked, how these inventory T accounts are linked up. All right, that'll do it. I'll see you in the next one.